Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Ben Jones, senior index strategist with Nasdaq Index Research, to discuss the Factor Zoo. Ben, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me on this week, and it's been a wild March Madness, that's for sure.
It surely has, and I bet you a lot of brackets were blown up from that very first Friday of play. So speaking of zoos, tell us about the Factor Zoo and where are the opportunities?
Yeah, so the Factor Zoo, it's a great name, kind of like March Madness, but it's a name to describe kind of the availability of different factors that are present in the market for investors to allocate to really kind of harness some of the, or harvest rather, some of the returns that are available in the marketplace. And it's a term that you've seen thrown around by various investment managers and portfolio strategists. It's a way to kind of describe all these different factors. You think back in time, kind of starting with the market, right? Beta. And then you start to see, different areas that start to return, experience different types of returns like growth and value. And really since the great financial crisis in 07, 08, you started to see other factors emerge, low volatility and quality and momentum, kind of offering a different return path. And these are akin to kind of what you experience and what you've seen and classified as kind of smart beta, right? Just different takes on beta by, trying to allocate to kind of different types of stocks that exhibit different type of characteristics. And what's interesting, this whole web, we see different factors kind of perform different ways and relative to different volatility profiles and return characteristics in the marketplace. And these factors can be combined in different ways. And so that's what you see on that web on the right-hand side. And so an interesting way of looking at this is actually looking at the opportunities that are present by analyzing correlations. And so in this study, we basically compared the correlation of excess returns of these different factor indices. These are using the Nasdaq Factor Family Index suite, where you can see value, momentum, growth, low volatility. And this is comparing the excess returns to the Nasdaq US Large Cap 500 Index. And so what's important here is that you can see some factors have strong correlations to each other or weak correlations to each other. But I think what is really important here is the negative correlation between momentum and value, right? It's at minus 0.63. That's an indication that basically when momentum zigs, value zags. And so there could be an opportunity here. And that is something that we have explored and we see investors allocating to because of these negative correlations between these two strong factors.
And Ben, tell us about the Dorsey Wright Momentum Plus Index.
Yeah, so there's a lot of different ways where you can, let's say, harness that negative correlation. So you see some that, try to allocate to a static allocation between value and momentum. But there is an index out there that does it a different way, and that's the Dorsey Wright Momentum Plus Value Index. So what this does, it tries to capture those two factors, and it does it by simply, taking an inventory of stocks, ranking them by their momentum, right? Those stocks that are outperforming have the most momentum, the most relative strength, be ranked to the top. The index then screens those high momentum names and then runs a value filter, looking at important value characteristics such as price to sales, price to book, price to earnings, price to free cash flow, and so those securities that are exhibiting the kind of the best value characteristics have the best value score, and that's where the index allocates to. And so essentially you have an index that has both high momentum names and deep value, strong value names as well. So you're able to capture those two factors in an index. So it's going to allocate to the top 50 of those names. It's rebalanced quarterly, and what you can see in this index today is something that's very different than the market. Think beta. And very different than what you've seen working over the past year, which is that preeminent, that growth factor. This index is currently heavily allocated towards financials, as well as consumer services and consumer goods. What's interesting is you can see just how underweight it is towards technology, which is only about 5% of this index at this time.
And to wrap up here in the last minute, how did it perform relative to the Russell 1000 value?
Yeah, so if we look at this index historically, you can see that it has struggled, right? Because value's been out of favor. But something that you and I have talked about a lot this year is just the return of value, the rotation of value. So if we look at this index this year, you can see that it's actually trouncing the Russell 1000 Value Index. This index is up about 22% this year versus value, which has done very well, up 11. I think that's an important sign, right? When you start to see a quote unquote multi-factor index outperform the pure factor. And that's what we've seen this year. And again, if you look at this index, again, compared to other areas of the market, let's say like the Nasdaq 100, for example, which is kind of tilted towards growth, or the S&P 100, you can see that this index, momentum plus value, has actually outperformed the broad market benchmarks as well, which is a sign that we've seen that rotation into momentum, or more importantly, that rotation into value. And so this index gives investors a way of capturing those two factors in a single index solution.
All right, Ben, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.